Most traders think they're one strategy away from profitability. They believe that somewhere out there, there's a setup they haven't discovered yet. A combination of indicators they haven't tried, a time frame they haven't explored, a market they haven't touched. So they keep searching. They spend months, sometimes years, collecting strategies like they're collecting keys without a lock. And the cruel irony is this: the final stage before profitability has almost nothing to do with strategy. It has everything to do with who you are when you're sitting in front of that chart. Because most traders who are almost profitable don't have a strategy problem. They have a self problem. And until they solve the self problem, no strategy in the world will save them. There are 4 stages of every trader's journey. Let me map this out clearly so you can see exactly where you are. Stage 1. Unconscious incompetence. You don't know what you don't know. Trading looks simple. You're excited. You take random trades based on gut feeling and YouTube videos. You lose money and assume it's bad luck. Stage 2. Conscious incompetence. You start realizing how deep this goes. You consume content aggressively. You backtest. You join communities. You switch strategies every few weeks. You're learning, but you're also spinning. Every new piece of knowledge creates new questions. Stage 3. Technical competence. This is where most traders plateau. You can read a chart. You understand market structure. You can identify your setup. You know the theory, but you still lose. And that gap between knowing what to do and actually doing it is the most frustrating place in all of trading. Stage 4. Behavioral mastery. This is the final stage. This is where profitability lives. Not in a new indicator, not in a different strategy, in the consistent application of what you already know, without emotional interference. Most traders get stuck between stage 3 and stage 4 forever. Not because they can't learn stage 4, because they refuse to accept that stage 4 exists. Stage 3 traders are dangerous. Not to others, to themselves. Because competence creates confidence, and confidence creates the belief that performance should follow. So when it doesn't, when you can see the setup, take the trade, and still lose the mind immediately looks outward. My strategy needs tweaking. I need a different entry trigger. This market isn't working for me. It almost never looks inward. Because looking inward is uncomfortable. Looking inward means accepting that you are the variable, that your impatience is real, that your ego is interfering, that your need to be right is costing you money, and the ego will resist that conclusion with everything it has. So instead it keeps searching for a better strategy, and the cycle continues. Stage 4 is not dramatic. There's no lightning bolt moment, no single trade that changes everything, no revelation from a mentor. Stage 4 looks like this. You take a loss, you don't take another trade for the rest of the session. You journal the loss calmly, you move on. That's it. Stage 4 looks like you see a setup that's almost your criteria. You don't take it. You feel no regret when it works without you. Stage 4 looks like you have a red week. You don't change your strategy. You review your execution. You find the rule breaks. You correct the behavior. You come back next week doing the same thing. None of that is glamorous. All of it is profitable. There are 4 specific behaviors that keep traders at stage 3. Behavior 1. Outcome attachment. You measure your trading by whether you won or lost the trade, not whether you executed correctly. This creates a broken feedback loop because you can win badly and lose well, and outcome-focused traders can't tell the difference. Behavior 2. Rule bending. You have rules, but they're negotiable. Just this once is the most expensive phrase in trading. Every rule bend teaches your brain that rules are suggestions, not structure. And suggestions can't hold you during a drawdown. Behavior 3. Revenge mindset. After a loss, you need to get it back. This is one of the most natural human responses in the world. It's also one of the most destructive trading habits. Revenge trades are almost always bigger, faster, and less selective than your system requires. Behavior 4. Identity-based trading. You're not just trading a strategy. You're protecting a self-image. I'm a good trader becomes something you need to prove every session. And needing to prove something means you can't afford to be wrong. So you hold losers, you ignore invalidation, you add to losing positions. Because admitting the trade is wrong means admitting you're wrong, and that feels unbearable. Until you separate your identity from your trades, stage 4 is unreachable. The 3 signs you're entering the final stage. How do you know you're close? Sign 1. Losses feel educational, not personal. You stop saying, I got stopped out again. You start saying the setup failed at X, which tells me Y about current conditions. Sign 2. You value no trade days. You stop feeling guilty for not trading. You start recognizing that protecting capital in low-quality conditions is a real skill. Sign 3. You feel disgust at bad trades, not temptation. When a marginal setup appears, your gut reaction is, that's not my trade, rather than, maybe just this once. This disgust is important. It means your standards have internalized. They're no longer external rules you're trying to follow. They're part of how you see the market. That's stage 4. There is a practice that accelerates the final stage, Mon. You can't think your way to behavioral mastery. You have to build it through deliberate repetition. Here's the exact practice that works. Step 1. Reduce size until losses are emotionally painless. This is not a weakness. This is engineering. You are creating a training environment where you can practice correct behavior without emotional interference. Emotional interference is what blocks stage 4, so you eliminate it temporarily by reducing the stakes. Step 2. Define success as process, not profit. Every day you sit down, your only goal is to answer yes to these questions. Did I only take setups that matched my rules? Did I respect my stop? Did I honor my daily max loss? Did I avoid revenge trades? If yes, it's a winning day, regardless of P&L. Step 3. Journal the behavior, not just the trade. Most traders log entry, exit, outcome. Stage 4 traders log emotional state, rule compliance, decision quality. You're not building a trade log, you're building a behavioral database. That database tells you the truth about yourself. Step 4. Create a pre-session ritual. Before every session, read your rules out loud. State your max loss for the day. State your max trades for the day. Remind yourself, execution is the goal, not profit. This sounds basic. It is basic. It also works because it primes your mind for the process before the market opens. Step 5. Debrief after every session. Not to judge results, to notice patterns. Did I feel urgency today? When? Why? Did I break a rule? Which one? What triggered it? These questions reveal the specific behavioral leaks, and specific problems have specific solutions. The painful truth about the final stage requires you to accept something that most people spend years avoiding. You already know enough. The strategy is good enough. The edge is real. The knowledge is sufficient. The only thing between you and profitability is consistent execution. And consistent execution requires you to face yourself honestly. Your impatience, your ego, your addiction to action, your fear of being wrong. None of those are solved by a new indicator. They're solved by awareness, practice, and the willingness to be boring. The final stage before profitability is not exciting. It's not a discovery. It's not a breakthrough trade. It's not a new system. It's the quiet, daily decision to execute your process correctly, even when it's hard. Even when you're down. Even when the market is moving without you. Even when everyone else seems to be winning. You stick to the process, and you trust that the numbers will follow. Because they will. The traders who reach the final stage and stay there aren't special. They're just the ones who stopped running from themselves. Thank you for sticking around till the end. Until next time, do have a wonderful trading day, and bye for now.